everybody, this is Nolan Smith with Ocean Vale Mortgage and Finance, bringing you more mortgage clarity. Now in today's video, I'm going to be talking about the difference between coming to a mortgage broker for your mortgage needs or going to your bank for them. Essentially, mortgage brokers act as a conduit between you and multiple mortgage lenders in Canada. Instead of you doing 10 different meetings with 10 different lenders and getting 10 different answers, we do that for you. You see, we're set up with various mortgage lenders to submit an application for financing on your behalf. Now, a major benefit to working with us is you don't have to pay us in most situations. The lender that we pair you up with pays us for sending them that business. Now, I want to talk about going to the bank for your mortgage needs. Banks are responsible for about 70% of the mortgage transactions in Canada. I believe that this is because they are the closest point of contact for the average Canadian when a mortgage need arises. But here's the problem. When you walk into a bank and they decline you for your mortgage, that's it, you're done. Mortgage brokers eat declines for breakfast. It's a part of our job. We move on and we keep looking until we find a suitable financing option for you. Now, there are a few benefits to going into a bank for your mortgage financing. Don't get me wrong. One of the main ones is familiarity. You know what you're getting, you understand and trust the brand, and you probably have been dealing with them for years. There's a certain level of comfort there, transitioning from all of your money and your checkings and savings over into money for a mortgage. Another undeniable benefit of having your mortgage at a bank is the amount of locations that they have around the country. If you live in Nanaimo or Victoria and you're on a road trip in Calgary and Edmonton, chances are wherever you are within 15 minutes, your bank is close by. But here's the thing, if you're using a bank for your mortgage, you kind of got to look at the fine print before signing on the dotted line. A lot of banks, by default, register a collateral charge on your property rather than a standard charge. Now, the difference between the two is actually quite astounding. If a bank puts a collateral charge on your property, they've effectively restricted your use of your equity to that institution and that institution alone. So if you're, for instance, going to get a mortgage from them for $200,000 and your property is worth $400,000, when they write your mortgage and put a collateral charge on title, they likely will register that charge for $400,000 instead of the $200,000 that they wrote you. Now, if you ever wanted to access that extra $200,000 in equity, you have to go to them to ask for it. If they decline you, you're straight out of luck because no other lender can get behind that charge because all the equity has been spoken for. Registering secondary financing behind a collateral charge is almost impossible with another institution, which is actually really terrible if you're the one bringing a $200,000 down payment to the transaction. On the other hand, a standard charge registers for only the dollar amount that you borrow. Almost all the lenders that a mortgage broker uses register standard charges. So if you buy a home for $400,000 and you need a $200,000 mortgage, that other $200,000 is accessible by any other lender down the road of your choosing. Now, a lot of people choose to stay with their bank for their mortgage because they've been with them for such a long time doing their banking that they figure that they might get discounts or favors from them. Well, loyalty is dead. In most cases, if you're not holding a big portfolio on account with them, meaning lots of investments and you have a huge net worth, they're not going to pull any favors on rate for you anymore. The fact that you've been with them for so long actually doesn't pull any weight when it comes to determining what rate you're going to get. It may have been that way in the 80s and 90s, but it's just not like that anymore. Now, another thing that I hear quite a bit is, well, all my banking's there. Good, keep it there. They're really good at that. But the reality is they just can't keep up with the service and rates that brokers and our lenders can provide. These are institutions and people that do only mortgage business, not TFSAs, not RSPs, and not 10 other acronyms that have nothing to do with financing your home in a way that is completely suitable for your specific life situation. Now, it's not all roses and sunshine with mortgage brokers. I'm sure you've either had a bad experience with one or you know somebody who has. Now, the reason for this is likely either lack of experience fostering uncertainty and delays, or a general lack of client care. That's why it's vital to do your research before selecting a mortgage professional to work with. So here's 3 things to do before picking a mortgage broker. Number 1 would be do your research online. People that have been blown away by a mortgage broker's service generally tend to rave about them online. And on the flip side of that, if they've had a bad experience, they'll do the same. Look for Google and Facebook reviews. Number 2, ask around. Friends and family can be a very, very good sounding board for picking a professional. They can either steer you in the right direction or they can lead you away from a bad apple. A broker only stays in business if he or she delivers outstanding service mixed with great results. And people talk. Number 3, look for experience. It takes 5 years in this business to get good at it. Great brokers can put on a professional front, but they lack the experience to get you results. And what's worse is it will be hard for you to tell if they are new. Pick somebody who's been in the game a long time, but not a dinosaur stuck in his or her ways. Mortgage guidelines and lending regulations change so frequently. So having somebody on your side that stays up to date and is smart enough to adapt to change is going to be paramount on the kind of experience that you have. I could go on and tell you how great we are, but we're out of time. Thank you so much for tuning into this video, Bank versus Broker. If you've gained something from this, please let me know, or if you know somebody that could, please share it or tag them. Again, it's Nolan Smith with Ocean Vale Mortgage and Finance, bringing you mortgage clarity.